All right, let's dive right in. Today, we're going to unpack a pretty provocative idea, something called the 30-year confiscation. And trust me, it's a concept that might just flip the way you think about homeownership on its head.
So let me ask you something. You've worked for decades, you've made every single payment, and you finally pay off your mortgage. That house is all yours now, right? Free and clear? Well, what we're looking at today asks us to take a much closer look at that assumption.
For so many of us, this is the goal. It's the pinnacle of the American dream, really. Owning your home, completely and totally. It's supposed to represent security, stability, the reward for a lifetime of hard work.
I mean, can you just imagine that day? You send in that final payment, the bank sends you the deed, that 30-year wait is just gone. It's a massive moment, a huge feeling of financial freedom, a real accomplishment.
But right when you're ready to pop the champagne, we have to talk about the bill that never stops coming. The one payment that just keeps showing up in your mailbox long after that mortgage is a distant memory. And you guessed it, we're talking about property tax. Basically, it's a fee you pay to the local government just for the privilege of owning your land and your house. It pays for things we all use, schools, roads, fire departments, all that stuff. So let's put these two side by side. Your mortgage, that's like a race with a clear finish line. You pay it down, you cross the line, and you're done. It's over for good. But property tax, that's a completely different animal. It's more like a marathon that, well, it never actually ends. It just keeps going as long as you own the property.
Okay, so what does this never-ending payment actually add up to over time? Let's crunch some numbers, because this is where you can really see the true long-term impact. For our example, let's just pick a nice round number. Say you have a home that's valued at $500,000. We'll use that as our starting point.
Now, property tax rates are all over the map depending on where you live, but we'll go with 1.25%. That's a pretty common rate in a lot of places. So that's the slice of your home's value you're paying every year.
The math here is pretty simple, right? 1.25% of $500,000 is $6,250. That's the check you have to write year in and year out. No exceptions. And this is where it gets kind of wild. Watch how this snowballs. After just 10 years, boom, you've paid over $60,000. By year 20, you're looking at 125 grand. And by the time you finally paid off that 30-year mortgage, you've already shelled out nearly $190,000 just in property taxes. So this brings us right to the heart of this whole idea. What does that giant cumulative number actually represent? What's really going on here? Just let that number sink in for a second. $187,500. And remember, that's not interest on a loan you took out. It's a totally separate cost that's been quietly draining away for 3 decades straight. And look at this chart. When you put it side by side, it's pretty staggering. The total taxes you've paid over 30 years is more than a third of what the house was worth in the first place. It's almost like you had to buy a huge chunk of your home and then just hand it over. And that's exactly where the name for this explainer comes from. The idea is that this process feels like a slow, steady confiscation. It's not some sudden event, but this quiet, creeping erosion of your actual ownership that happens so gradually you barely even notice it. So after all that, where do we stand? Well, this whole line of thinking really forces you to kind of step back and rethink what it actually means to own your home in this day and age. So let's wrap up with the main takeaways. First, homeownership comes with a forever payment attached. Second, that forever payment adds up to an absolutely massive amount of money over time. And what that really means is, third, the whole idea of owning your home free and clear might be more of a nice story we tell ourselves than a financial reality. And that leaves us with this one last big question to chew on. If you have to keep paying someone else forever just to keep your property, are you really the owner? Or are you maybe just a renter with a really, really long lease? It's a challenging thought for sure, and definitely something worth thinking about. Thanks for tuning in.